Hi there, and welcome to Risk Check with Andrew, a series that we have been running for the past few weeks, just trying to understand our risk profile, just trying to understand the risk that you can be able to take, just trying to explain the few factors that you should consider in able to be for you to be able to understand your risk appetite, the amount of risk that you can take, and it is the amount of risk that you can take that guides the kind of investment that you get into. And on episode 4 we are focusing on the expected changes in your income for the next 3 to 5 years. So that is one of the things that affect your risk appetite. It is good to note that your risk appetite do not remain the same for the entire of your life. We saw that in episode 1 it changes with age, and in this episode we see that your risk appetite changes with expectations or some changes that you might expect in your life, income being one of them. So this is the question in the room today. What do you expect of your income in the next 3 to 5 years? Number 1, decline or stop. Number B, stay about the same. Number C, increase. Now, I know life might be so unpredictable, so at times, because we might not be able to tell so much about the future, but some things definitely can be predicted. Like there is someone who knows that they will get to retire in 3 to 5 years, and one of the effects of retirement is that their income will decline or stop. It might decline if they have a pension scheme that might start paying them pension, but it might stop if they don't have one. So some of those are predictable. So this affects your risk, the risk appetite at this particular time. So if you expect your income to decline or stop in the next 3 to 5 years, you should be very conservative. You should focus on investment that have some kind of capital preservation, because that money that you have right now might be the money that you will be relying for your survival come the next few days or come the next few years. If you expect it to stay about the same, you are at moderate position. You can take some risky ventures, but still maintain some level of safety, because you might come relying on this money that you have right now in the next near future. But if you expect it to increase, your wings are open. You have a wider range of investments that you can take, even those that are a bit risky. So it is important that you get to note that the expectations you expect in terms of income should affect your financial decision, even if it is not on matters investing, also in matters spending. If you think that you might come to lose your job in the near future, one of the best things that you can do is stopping unnecessary spending, because this money that you have right now, you might need it to survive in a time that you will have no income. So try and also base your current decision with the future expectations in terms of income. I hope this makes sense, and see you in episode 5.